Custody is something that's very interesting because of its differences between crypto and security tokens. And so a common misconception is that the security tokens can be hacked or stolen. I mean, we've seen this in the crypto space many times with these crazy headlines of $60 million stolen or this exchange hacked or this or that. But it's not a reality for security token ownership. And it's something that we've strived to make clear. And on top of moving away from that misconception, I think it's also going to be very interesting to talk about some of the potential benefits of custody. But due to the immutable ledger of ownership, tokens aren't stolen, or if tokens are stolen rather, or improperly acquired, the individual tokens can just be burned and removed from the circulating supply and reissued to the rightful owner. So this is not something that you need to worry about necessarily in terms of it just being, the transaction is permanent, I can't get anything back. No, that's not how it works for the public securities if that were to ever happen. And it certainly wouldn't happen for private securities because, again, it's a legally binding ownership for the specific custody.
Tokenization is a governance benefit. That's what's going on here. So you do not need to worry about in this old world. Even I'm glad that you talked about, Kyle, this issue of cryptocurrencies getting stolen, because that's of course not possible with security tokens when it's all on the ledger and you're either using an issuance platform or a transfer agent to correct any issues. But more importantly, in the traditional way, in the 99% of way things are done without any wallets or anything like that, you do also have plenty of cases of fraud and issuance and simply negligence on behalf of an issuer, where you might have an issue as an investor fighting for your rights or fighting for your equity of your original investment, and that can only be done with a lawyer using whatever evidence you can to show that you made that investment, from legal documents to anything else. Whereas with an immutable ledger that everybody uses as a owner of the security, if it's managed by the issuer, it's simply impossible to try and I don't want to say impossible because fraud always finds a new way to evolve, but at the end of the day, it definitely makes it a lot more difficult because everything is fully traceable and can be reversed if necessary when presented with the right information. And if a reversal that happens that's incorrect, Kyle, guess what? You can reverse the reversal, because ultimately at the end of the day, as long as there is a legal quality of proof on everything, you'll be able to amend things the way they were. So we don't need to worry about people stealing our tokens anymore, and we don't need to worry about someone trying to rip me off, let's say, because it's all on paper and it's a completely analog, fragmented, and difficult process.
So why is personal custody then important for security tokens? Why would an issuer really care?
That's a really great question, Kyle, because it does matter a little bit on the perspective, right? We're primarily right now talking about angel investors or accredited investors, or if you want to go as far as to say non-accredited retail investors participating in a Reg CF or Reg A Plus offering that happens to be tokenized. In this case, what we're talking about here is indeed, as you have defined it, as personal custody. In the traditional sense, you also are personally managing your asset. But in this case, you didn't really have a representation of it. It was really just merely you're part of a cap table. Maybe there's a digital tool like Carta helping you power that. Or more likely, you are a row on an Excel sheet held by the issuer. In this case, because you now have true ownership of your security via this represented token, you can actually now enable a lot of governance benefits. On top of the benefits that we just talked about regarding clear record of ownership and no concerns around legal settlements or disputes around that, we also have the theft protection, because no one can, as we just said, no one could steal it. Then on top of that, we have dividend collection methods that'll make it easier for you to collect, say, a coupon payment or a dividend payment. You have proxy voting tools, which can be done either by staking the token or built directly into the issuance platform managing it. You now have a way that you can sell your token, of course, the most talked about benefit of all. Me now personally owning my investment into said startup allows me to take that investment either peer-to-peer to somebody else who qualifies, to an exchange that is regulated, enabling me with brokering me a buyer. So there's now a real personal ownership benefit. And because of the fact that, again, it's all on chain, you have to worry a lot less about some of these analog processes that could go in and potentially create opportunities for fraud or simply issues within the governance process.
I also think it opens the door for institutional custodians. And so I think it's also important to talk a little bit about what a third-party asset custodian does. And so in traditional financial services providers, a third-party custodian manages and secures its clients' funds. And so, as you mentioned, for retail or for accredited investors, for smaller cap investors, this is not something that they necessarily need because they can manage it as well as they might need to. They've got 20 or 30 investments, and so they can manage that pretty effectively when you're talking about a smaller amount of money. But for larger institutions, they find a ton of value in using these custodian banks, as they're colloquially called, because they offer the same kind of asset security that banks provide for liquidity in cash and providing all of those services. And so the question is, do security tokens need asset custodians, or certainly do large funds that maybe end up participating in security tokens need them?
And it's a fair question, right, Kyle? Because we just made the argument that thanks to blockchain technology, we can now personally custody our securities and our assets without fear of stealing or fraud or any issue, with a more effective way of managing things, because I can collect information, I can participate, I can get dividends, or I can even create liquidity all by myself. So that is a massive improvement. So it begs the question, if you don't need to worry about your information, your tokens getting stolen, then what does a third-party service provider add value to in this case? Because we do know that when it comes to retail markets and the public markets, as well as institutions, they will all use a custody agent to house their assets and their securities. So will the case be the same for security tokens?
Well, I certainly think that there's a legal component here in terms of needing to have a custodian for certain types of transactions. But I also am incredibly excited and see a ton of value in the support features that a third-party custodian can layer on top of that traditional management. And so when I'm talking about that, we're talking about visualizing and tracking the portfolio, where you can have an analysis of your portfolio and its information and how that is performing across all of your different assets. You can have improved wealth management and growth in terms of rebalancing your portfolio if you want to store specific cash and you want to participate in security tokens, and you can allow a wealth manager to potentially rebalance that portfolio. Certainly an extended feature of a custodian, and maybe there's some blurred lines between whether that's a separate financial services provider or not, but certainly they are providing custody for your assets and rebalancing those over time. You have account management for dividend, coupon payments, things like that, whether it's to collect those things and rebalance your portfolio and reinvest, or whether it's to draw those things out and manage them somewhere else.
Let me even tackle that one just as an example, Kyle. Great, I have a security token personally in my own wallet, and it sends me, let's call it JPM coin, as their payment to me every 90 days. And when it comes to one company doing that, that's great. Maybe I have a couple more with the same method. I can manage that. But let's say I have another one that mails me a check. I own the security, but they have chosen not to leverage on-chain dividend payments or coupon payments. So now I've got one that's a security token that I'm getting physical checks from, and I've got another one that I'm getting on-chain instantly redeemable cash coupon payments for, right? That can get very complicated at scale. This is exactly where I might want a custody agent that streamlines and manages all of this for me so that I get my check, perhaps via JPM coin or traditionally, as probably how the client would like it, as one lump sum of everything, as opposed to a dozen or worse, hundreds of different transactions every month that need to be compiled and aggregated to give it a more clean understanding to the client.
Exactly. That's exactly it. It's scale thing, right? And when you're talking about this, yes, you can manage these things at a small time level. But when you get to hundreds of transactions and hundreds of assets or thousands of assets and millions of dollars, I mean, it's helpful to have all of these things streamlined by professionals who their only job is to manage these things for you, so that you can focus on doing the things that you do best.
That scale component you're bringing up probably applies to liquidity too, right?
I'm sure.
At the end of the day, if you have a universal custody agent with a large network of exchanges, intermediaries, market makers, and buyers and other institutions, it'll be much easier for you to find liquidity for your portfolio, more likely through them if you custodied your assets with them, as opposed to you personally managing that process and looking for the various exchanges and calculating where the best place to find liquidity and sell your security token on. So this becomes not only just about scale, but then also about your own time management capability. It's natural progression.
Much easier and much smarter, Herwig, because when you're looking to sell a large block of a specific token, you don't want to just sell it on one exchange and just flood the order book, and now you've lost a ton of money in that process. You want to systematically sell smaller portions across multiple exchanges with multiple liquidity pools, so that you can properly get the fair value for all of those shares. You can't just dump 1 million shares into the market. It's just going to flood the supply and crush the price, right? So again, is that something that you as an asset manager want to do across all of your different holdings? Or would you rather somebody that that is literally their job, is to manage those things and provide those OTC transactions, to manage and to as you said, market makers that literally work with asset holders to be able to rebalance those order books. So
Absolutely.
it's not only easier, it's also just you're going to make more money that way in terms of selling or buying.
ROI is everything, right? And you did also mention that there was a legal component to it too that I think is definitely worth bringing up more information on, which is jurisdictions around the world, they all have different regulations on how they're treating, they're regulating financial securities. And most of the time, including here in the US when you're dealing with brokers and public securities, but also in Europe and many others that I'm aware of, require a legal custody agent to be a part of the process. Maybe this is because they're outdated laws, but more importantly, it does de-risk a lot of these financial ecosystems and infrastructures, and therefore it creates one more layer of dedicated protection for investors within this ecosystem. So I think if I had to sum it up, and maybe you can sum it up differently, Kyle, is that when it comes to traditional custody management, especially for individual investors, blockchain technology pretty much levels the playing field and removes a lot of the analog problems that plagued investors today. Analog problems like paperwork being here and there, not having an official trail of record, and other things. But this also is an issue for institutional custody agents that will also improve their processes. But when it comes to taking advantage, it doesn't necessarily eliminate the need. The technology doesn't eliminate the need for a custody agent. In fact, custody agent will likely benefit from being able to offer a lot of additional services, financial services for you that can be much more effective at scale as well as for your time.
I totally agree. I think that that's very well said. I think that the additional piece that we add on here is that these third parties, especially as you've mentioned, these third party custody holders and these institutional custody providers are going to allow for international interoperability. And so with their huge capital allocations, with their large brand names, with their trusted reputations, and the ability to be able to spend to properly legally protect themselves in as many jurisdictions as they can and work with as many exchanges as they can, it's just a total ease of use thing for investors, right? If you want to be owning assets across different countries, across different exchanges, if you need to work on shareholder governance and figure out how all of these pieces play together, especially as you said with The reality is that the security token definition, while it's something that we want every country to define, may be very different in different jurisdictions, and who may be able to participate and who may not. And so working with a third-party custody agent, certainly for the intermediary settlement, will be a huge piece in terms of being able to figure out which assets you can buy, which ones you might not be able to buy, and how to manage all of those things across all of your portfolio, and being able to participate in governance and all of these things around the world all in one place, I think will be incredibly valuable on top of the huge technological benefit that security tokens provide that really, I think make a huge difference as opposed to the analog ownership that we currently have today. So I think that the way that you've summed it up here, Herwig, with the economies of scale and your time results in the need for a third-party custody service on top of this wallet technology.
And also akin to one of our previous episodes when we did a deep dive into transfer agents, which in a similar way become more efficient thanks to blockchain technology. And some of those benefits that they traditionally offered do become redundant as a result. But at the end of the day, their legal benefit as well as their efficiencies and scale benefits and added value services are really why you want to end up working with a third party as opposed to potentially managing your entire portfolio on your own, which, as we have identified, is also at least dramatically more efficient for angel investors and private investors as a result anyway.
And we don't just see this as something that we see as a solution. Right. It's all works together, and certainly large institutions see it the same way. You look at the fact that Coinbase is already providing custody services for blockchain capital, which is a security token representing LP shares of a crypto investment fund. But even bigger than that, Coinbase provides custody for a lot of cryptos, which is really just a gateway for them to be able to provide buy and sell orders for those cryptos, which is really where they make a large portion of their money in the transaction fees. And we likely see something similar going forward with security tokens if they can get the proper licenses. On top of that, we have Fidelity Digital Assets, which is, Fidelity is a large asset manager. They've created a subsidiary, Fidelity Digital Assets, that's expected to explore security tokens in the future. Currently, it does only provide support for Bitcoin, but that's understandable at this time because the security token space is still growing. And then finally, we have Bakkt. It is Bakkt Day today, Herwig, because Bakkt is owned by the Intercontinental Exchange, which also owns the New York Stock Exchange. And Bakkt is a Bitcoin futures platform that's providing those contracts, and they're also expected to explore this space moving forward. And the reason why I call it Bakkt Day is because they actually went live with their Bitcoin futures today. Today was the first day for them to do that, which is a great institutional step in the right direction. And so we'll see how that plays out moving forward.
For those of you listening, that is actually yesterday. But in fact, that is right. Happy Bakkt Day, Kyle. And ultimately, this is a clear example and sign that the institutional players both use custody as a value-added service for their investors. It's a must. It's a requirement, sometimes from a legal perspective, but really a must from a user experience perspective anyway. And also, more importantly, you see big institutions coming into this space. There's no doubt that we will start to see dedicated custody providers around security tokens come to light and provide a lot of the values that we were just talking about today, thanks to the fact that they're using an entirely on-chain ecosystem to manage and custody their securities and assets.
So just like the exchanges that we're waiting on and watching to see as they continue to grow and expand, I think this is also a very interesting space that we'll continue to monitor as it grows and expands, and is only going to do great things for the industry in terms of providing those institutional gateways and opportunities to feel more secure in investing in the space, as well as really pushing the industry forward.
I think that's great. And with all that's all we have for you today. I want to thank everybody for listening, and I hope that you'll tune in again